Hello, everyone, and welcome to our series, Building Strong, Prosperous Financial Future. I know some of you will be wondering what happened. So what happened? I was away on vacation and I'm back. So today we're going to work on episode number 9. In episode number 8, we talked about term life insurance. So we're continuing the series on life insurance today by talking about permanent life insurance, but with emphasis on universal life, UL. Now, UL is a type of permanent life insurance that comes with two components. The death benefit component, which is a protection component, that is, oh, I want to do 200,000 permanent life insurance. So that's what goes to the surviving family once you pass. The second component is investment. So this one actually comes with cash value on the long run. So, and you can tap while you're alive into that cash value. And that's part of what we're going to be talking about. Now, let's look at the flexibility of a UL. Number one, you determine how much premium you pay every month. After the illustration must have given you the minimum and maximum. So UL comes with a band of minimum and maximum premium. Of course, the more you move beyond minimum, the more you have money that goes into investment, and I'm going to talk about that. The second flexibility is that you are in control of that investment. You determine the kind of fund you want your investment to go to, the investment you want. So you determine that. Also, you can determine how long you want to be paying premium for. So a lot of people will say, okay, set my premium to up to the age of 65. And then that's when it stops. But of course, you still have the policy, and your policy is still valid as long as it's still well funded. Now, let's talk about the investment component. So when you pick how much premium you want to pay, insurance company will look at it as if you are making a deposit. So they break that amount down into three components. One is how much is the cost of insurance for you based on your age and other factors. Number two, they put that aside from the deposit or the premium you pay, and then they take their administrative charge and they put that aside. So what remains is what goes into your mutual fund or the seg fund that you pick, or the investment that you pick. So that is the way it works. And you start building that investment, which you can tap into years down the road. So those are the beauty and component of universal life. My time is already past 3 minutes, so I will stop here, but I will continue with universal life next week because there's a lot about universal life. It's so beautiful. And so again, my name remains Adekunle Ajishebutu, CPA, CMA. I will see you next week when we start going deeper into UL, and we're going to use an example. So we'll take somebody as an example and see what happens to that portfolio or investment portion of their UL. So again, my name remains Adekunle Ajishebutu, CPA, CMA. Please comment, and I appreciate when you comment and tell me what you need to know more, or just your own, the way you feel about the whole thing. If you like what I'm doing, please share with your friends. I would really appreciate that. So I'll see you next week. Thank you.